And hello traders, and welcome to another video. So in this video we are going to talk about break of structure. Okay, so I'm going to show you multiple examples drawn like this, and also examples on the charts. So I'm just going to explain what we consider as a good break of structure versus bad break of structure, etc, etc. So as you guys know, we look at price action in details. So for us, it is really important to look how the price is breaking the structure. Okay, so there is a difference between bad break of structure and good one. And of course, this is also going to dictate, are your trades high probability or not? So for example, if you do not have a good break of structure, of course your trade or your order block will be less probability. Okay, so yes, in this video we are going to explain what is the difference between good break of structure and bad break of structure. So guys, please watch the video until the end. We're gonna go and break down tons of price action, so you are going to benefit a lot from this one. Okay, so yeah, we can begin with the video, guys. So in this example in front of me, I have really example of what is good break of structure. So as you guys can see, price is showing us that we have momentum to the upside, price is showing us momentum to the upside, then we have a retrace or pullback, and then we are breaking above impulsively. So you always want to look at this high right here. So this is really important, because this dictates if the break of structure is impulsive or not, good or bad. Okay, so if you see after the pullback, because again guys, market moves like that, you have an impulse, you have a pullback, impulse, pullback, impulse, correction, impulse, correction, impulse. It's important to look how are we breaking these highs. Are we breaking them impulsively, or we are breaking them maybe correctively? Okay, so as you guys can see here, we have a strong momentum to the upsides, nice candle close. Okay, and this is our indication that momentum is present, that price wants to trend, wants to go in that same direction, wants to continue to the upside. And again guys, what happens after creation of a new high here? Again, after this impulse, we can expect to see a pullback, and we can see another continuation and another impulsive break of structure. So if we see that price action is breaking this high impulsively with a strong candle close, this will indicate to us that trading from this order block is high probability to trade. Okay, because again, because again, price action is indicating to us that there is momentum in the market, guys. Okay, so if we see a pullback here, this is going to dictate to us that this trade is high probability. Okay, so there are certain things, a few more things. You know, you can see this kind of beautiful momentum, price action, everything, and at one point everything can get ruined. But again, we're gonna talk a lot about price action and all different things in videos to come. But again, I can show you a little bit of examples. So here we see again perfect price action showing us momentum to the upside, retracing, we have a pullback correction and another impulse, breaking these highs impulsively. This candle close is strong, everything is really good. But what happens if we have a massive wick, and what happens if we have another candle that is coming back aggressively to our block? All of the sudden, this is not the same trade. Okay, so all of the sudden this order block is not that high probability anymore. Okay, why? Because again guys, candles and price action tells us a lot. So in this case, price is showing us that price is rejecting the highs, it doesn't want to go to the upside anymore, and we have a strong bearish momentum coming down to that order block. So we know going against the momentum is considered risky, okay? And if you go against momentum, price can easily hit your stop loss, okay? Just melt down through that order block. And you're gonna be left wondering, why did I take the trade, okay? So also how price comes back to our block and how our candles close also dictates a lot about the price action. So what happens if we do not have a big wick? And what happens if price action continues coming back to this order block, but it's continuing to come in this order block correctively? Okay, so we see correction, something like this, and then we see something like this, okay, and something like this, okay, and price tags you with this wick. So this right now, guys, is considered high probability. Why? Because again, we have impulse, correction, impulse. We're breaking this high impulsively. We have a strong breakout structure, okay? We have a nice candle close. There is still momentum present, and there is a nice pullback. So we have impulse, correction, impulse, like here. So we're breaking this low correctively. Again, we have that a little bit of descending price action coming back to our block. So the pullback is corrective. Pullback is healthy, not aggressive. So it's the same thing when you're looking at this chart. Let me show you, let me draw you an example like this. You're gonna have an impulse, you're gonna have a pullback, and you're gonna have impulse to the upside breaking this high. Right now you have our block here. If price action comes correctively to that order block, building liquidity on the way up and retracing a few times before touching this order block, this is considered high probability order block, and you can take your trades, okay? And if this kind of price action happens, when you have pullback, you have impulse to the upside, and let me draw it like this, you have a reaction and then impulse to the upside, and price just starts to come back aggressively to your block, this is considered bad. Why? Because you are trying to trade against momentum, and price can easily continue with the same momentum and you can get stopped out, okay? So this is why it's pullback also dictates a lot of things when you're trading, when you're looking at order blocks and pullbacks. But again, guys, we are going to talk about these things in future videos. So the topic of this video is consider breakout structure, but I wanted to add on and explain a little bit more things, because again, we are talking about what is also high probability. Okay, so in this example here, we can see average probability order block. So this one was high probability, price is breaking above, we have a strong candle close, everything is really good. So this is why this is considered high probability order block. And why is this considered the average probability order block? Is because we do not have that impulsive breakout. Okay, so as you guys can see, we only pushed with one candle, and it's okay, you know, it's not that bad. It's not considered bad when you have a breakout without one candle. But again, for extra confluence and for extra confirmations, we would like to see another candle breakout to the upside. This will indicate again to us more momentum and more safer entry. Okay, so this is why we have right now, again, we have breakout structure, we have nice candle close, we don't have any big wicks or something like that, you know, we have a nice candle close, everything is good, pretty good. So this is considered average probability order block, because we don't have enough confirmations. You know, we would like to see more confluence involved, more momentum involved. But again, at the same time, again, we have a nice breakout and nice close, so we can still consider this as average probability order block. Okay, what would not be good is if price action leaves like a big wick, and then we again come back aggressively. This will indicate volatility to us, and trading against momentum is almost never a good idea. Okay, guys, so this is something that you consider average probability. And in this example right here, guys, we can see low probability or block. So this is considered aggressive. So as you guys can see, price action is pushing above. We have this retrace, a little bit of pullback. And what we're expecting after the pullback is price is continuing with this momentum. If price action continues with this momentum, this will indicate to us that direction is present, momentum is present, and our trades are going to be a lot safer here. Okay, but what happens? How do we break this high? We break it only with the wick. What happens after we break the high? Immediately we start to retrace. Okay, so this is why this is considered aggressive and low probability. Price action is not showing us momentum, and it's not showing us that it wants to trend, that it wants to go in that direction. It's showing us that it's rejecting the highs, and it's showing us weakness. Okay, guys, so again, you are going to determine with price action, is your order block high probability or not? If we do not have a nice break of the previous high, previous structure, this order block is considered low probability and you should not trade it. Okay, this is considered aggressive. Okay, guys, so this is just a quick example of the strength of the break of structure itself. Okay, so again, guys, you are going to learn a lot of different things, you know, in the next couple of videos. So stay patient, you know, after every lesson, go and test it out, play a little bit with the charts, get to know, you know, the video that you were going through, and move on. As you move on, everything will be really delivered to you guys, and you're gonna see with every new lesson how everything connects. Okay, so just don't get confused, do not rush, you know, patience and take your time. I'm going to show you different kind of examples, guys, on the chart, literally explaining this concept. Okay, so as you guys can see, we have this chart right here. So price was going in this uptrend, as you guys can see, pushing higher, and then after this point we have this change of character, we have this break of structure, you know, we have this impulsive movement to the downside. As you guys can see, it was not that clean and not that clear. Why? Because we have one retracing impulse, second retracing impulse, third retracing impulse. So this was not quite good momentum. When, you know, when we consider momentum, we consider price breaking below with no retraces. You know, this is indication to us that price action, this impulse is clean and clear. But as you guys can see, in this momentum, we have one retrace, second retrace, and third retrace. So as you guys can see, we also came back aggressively. So when you see momentum coming down like this, and the same momentum coming back up, this is considered as volatility. And usually what happens after volatility is that price action is most likely going to be corrective. Okay, so most of the times when you see volatility, correction happens. Okay, in this case we didn't have a correction, we had reaction from this supply zone here. After that reaction, again, I do not consider this as something valid, because when I see a supply zone, okay, so let's say we have a supply zone and price action is approaching with this supply zone. After that reaction, I expect the price to do this, okay? And this is going to be my new valid supply. So first thing what I want is impulsive break of structure / change of character. I want this momentum to be high probability with no retraces in it, momentum imbalance. And I want to see every little thing hyper. So I want to see reaction, I want to see impulse, momentum. And as you guys can see, after this reaction, we didn't have momentum. Okay, we start to again break the lows, retrace, break the lows, retrace, break the lows, retrace, breaking the low, this low. How did we break this low? You know, with no momentum. So this is why I do not consider this as a valid supply zone for the future. but you're gonna learn about supply and demand zones later on in the videos, guys. So again, we are looking at break of structure. So how are we breaking this first change of character with the whole impulse impulsively, with the whole impulse impulsively? How we're breaking this with this whole impulse impulsively? So we see that we have a reaction. Again, price is indicating to us that it's changed the trend. The trend is right now starting to be bearish, and then again reaction, and this is what I consider as a reaction. As you guys can see, a perfect reaction from this impulsive break of structure to the downside, imbalance left behind, momentum left, and then we have again another retrace. So this was a retrace candle, guys. So this is also a break of structure, and then boom, how is price breaking these lows? Impulsively. So how is price action breaking these lows? Impulsively. So you see that we have impulse, this impulse here, we have a pullback correction. Then how are we breaking these lows? Impulsively. And what happens? We have a retrace. Again, how we break this low? Impulsively. So this is our indication that momentum is present in the market, guys. Okay, and this is where we want to get involved in those high probability trades, on those high probability order blocks. As you guys can see, price continue backed, again 50% entry, boom, meltdown. Again, how we're breaking these lows. You know, this low not that good, so we're not breaking it that kind of good. Immediately after we broke it, retrace, but again, boom, how we're breaking this low right here. Again, 2 candle breakup impulsively. So this is your example how it should look like when you're looking at, you know, impulsive break of structure. So really, guys, how we're breaking those highs and lows really play a big role in everything. So this is going to dictate to you every little thing. Is the direction really bullish? Is the direction really bearish? Is there momentum in that impulse? Is your order block high probability or not? Is your trade going to be safe or not? You know, to trade everything, you know. So looking at how we are breaking those highs and lows are going to tell us a lot of things. So if we are pushing up with momentum and impulsively breaking these highs, this is indication to us that price wants to trend, and the trend is bullish, and we want to take advantage of that kind of price action, because our trades are going to be a lot safer and a lot of more high probability. Okay, so this is where we want to be, taking advantage over the market, over the nice momentum in that current phase. So again, this is your indication that, you know, how we're breaking these highs and lows. And in the moment, guys, I'm going to show you an example of what happens when we do not have impulsive break of structure. So basically the same example, price was going in uptrend and then boom, change of character. But right now what happens? How do we break this? Immediately after we break it, retrace. Immediately after we break it, retrace. Immediately after we break it, retrace. How we're breaking this? Again, we're breaking it impulsively with this candle. And then what this candle does? Again, shows us that price doesn't have momentum to go to downside. Makes a wick, a retrace. Then how do we break again? Again, there is no impulse in this momentum. How do we break it? We barely break it. What happens after we break it? Immediately wick, immediately retrace. So what happens again? After we break this low, immediately wick rejection, immediately retrace. What is happening after we break this low? We had a nice candle close, but again, immediately retrace. And what happens here? You know, every candle breaking with the previous candle, this also is indication that momentum is slowing down in the market. When you see the price action is moving like this, and and every candle is taken out by the previous candles. So you're gonna see something like this, you know, price action doing like something like this, every candle breaking the previous low, and this is also indication price is most likely going to reverse. So as you guys can see here, we do not have momentum, you know, there is no momentum involved in the market. Price is just showing us weakness to the downside in form of this descending price action. And guys, if we see this descending price action, okay, and if we see that price is again breaking the lows, retracing, breaking the lows, retracing, breaking the lows, retracing, breaking the lows, retracing. This is our indication there is no momentum in the market and price is tired to continue to the upside, to the downside. And what happens after we see this? Usually we see change of character and we can trade this as a reversal trade for the bullish movement to the upside or change of direction. Okay, so again, this is indication of price action showing us weakness in the market. It doesn't want to continue to move to the downside, and then boom, we see that shift, bullish momentum coming in the market, and then we want to take advantage of it. So again, guys, price action is telling you a lot. Let's see what happens. Maybe some traders will see like something like this. Change of character, we had this flip right here, strong demand zone, flip right here, blah blah blah, you know, this is confirmed. Let's trade something, you know, here. Let's trade something. And what happens? Again, price action showing us weak and aggressive, coming back to that supply, you know, again aggressive. And then what happens? Okay, so what is price action showing us here? It doesn't have momentum to continue to the upside. Again, how do we break the highs? What happens after we break the high? We break the high barely. What happens after? We make a retrace. Again, how do we break the high? Barely. What happens after? We make a retrace. So there is no momentum in the market. Okay, so let's see what happens. And boom, right now, price is now showing us momentum. And after this downwards momentum, when there was really no momentum in the market, price was showing us weakness, boom, price made change of character, continue to the upside. We didn't have momentum right now, but right now we start to have it. As you guys can see, pullback, continuation. This is how market moves, guys. Okay, so this is how market moves, and there would be sellers here that would sell in a lot of supply zones, and they will get caught because they do not look at market direction and they do not look at price action in detail. So again, what is this? Simple impulse correction. Impulse. How do we break the high? Impulsively. What happens after? Most likely we are going to see another pullback. Okay, another momentum, and right now another pullback. And what happens after this? You can expect that we're breaking the highs again. How are we breaking the highs? Impulsively. So this is a trending market. This is where price action is showing you that we have a momentum, we have a retrace. We have a momentum, we have a retrace. We have a momentum. This is where you want to get involved in the market. This is price action showing you that it's breaking the previous structure, these previous highs impulsively. How are we breaking these highs? Impulsively. How do we break the highs? Impulsively. There is momentum involved in the market, and every order block right now that you're seeing here is high probability. And there will be a lot of traders who are looking at this as a flip, change of character, and they would not look at price action in detail. They would see this as a downtrend. They will sell. And yeah, this would be you know, impulse to the upside. Then we sell here, sell here, sell here, sell on this extreme here, you know. And for us, this is not valid. This is not valid supply zone for me, because it didn't cause impulsive break of structure. It just barely broke. Yes, we have momentum. Sorry, we do not have momentum because it was one candle breakout. This big of a candle can be a news candle also. So only thing that we have is we left a little bit imbalanced. But again, this is how you are going to recognize, you know, impulsive break of structure and, you know, not impulsive bad break of structure. You know, the good one is going to indicate if the direction is good, is your trade safe, is your high probability or block high probability. The bad one is basically going to show you that there is a weakness in the market. So again, guys, this is why it is important to read price action in details and be well aware of every little thing on the chart. Okay, so yeah, that's basically it about break of structure video. Hope you guys enjoyed it, hope you learned something new, and yeah, see you in the next one.